Alright, hey everybody, this is Jack and welcome to your free video. Another end of the week sell-off and a continuation of that selling from Tuesday. Now before you let the chart on the right hand side give you a little bit of a headache, this is just going back to Monday. Here's our week, Monday through Friday. A little bit of euphoric buying from Monday to Tuesday, nothing held up. Absolutely nothing. On the left hand side daily chart, you can see we've been keeping an eye out for this head and shoulders pattern that seems to be kind of coming to completion as far as just the setup in general. So if you've already been short from anywhere from 15,000 or lower, 14,500, certainly getting the best position, certainly the best benefit from being short from that head and shoulders. The big question that I have about next week, heading into a short week, Monday through Thursday before Good Friday, is what does the market do on Monday? So first things first, this is my checklist. Sunday into Monday, I'm going to be looking at overnight futures to see if there's some type of positive move. Monday morning, if you'll join me in the day trading room or futures, we will be looking for a positive move to possibly sell. I will also be looking for a S&P target to short 4,500. I'm letting the bear out of the closet, and maybe I'm a little bit late, but I'm looking to retest the gap down at 14,000. And considering where we closed today at 14,300, seems like it's not too far away. So there might be a few resting spots around 14,200, but ultimately I think if we get to 200, then we are on our way to getting to 14,000. That all changes if we start to show a little bit of sign of life Monday through Tuesday and it's constructive average volume buying. The problem I have with that idea is it's going to be a short week, and frankly I don't think we're having too much of a catalyst based on the 0.5% rate hike. We're still absorbing a lot of selling. There has been lower volume just in general, so it's really tough to come in here and be optimistic about making a new high or at least trading back into 15,000 on the NASDAQ. The problem also that I have with just not the NASDAQ, but the S&Ps now have a squeeze that's looking to try to fire to the downside. Other than that, we have weekly time frames with micro squeezes that could also be translated into overhead resistance. So it's kind of a tough call. If you're just trying to buy the market on Monday, I think you better wait. We're going to try to sell this in the morning. If we can get a little bit of a gap up, that'd be fantastic. Anything up about 450 on the NASDAQ for Monday morning, I certainly want to be looking to try to short that, especially if we're going to run back into those previous highs from Thursday or Friday. The argument could be made that we go right back into about 14,400 or 450 and then do another failure at the 1 hour reversion to the mean, which is pretty much like right in line about right here. We're just kind of focusing on this little cluster, and then also the moving averages from all the daily time frames, especially the S&P here on the right hand side. We are flirting with the daily 200, right? What happened at the beginning of this week? Well, we were trading at the daily 200 and we broke through it for the past 2 or 3 weeks. We've just been flirting with the daily 200. For me, that's a big line in the sand. If we are going to trade below it, I would like to still continue to trade below the daily 200 back down to those levels. 4,500 we didn't hold. 4483 is not too far away from 4,500, but when considering VWAP's initial balance, all sorts of other charts that we look through in the futures room, maybe if we retest 4450 and 4460, that's going to be a big sign that we are heading lower for the short week. But then after that, and obviously we'll have more videos for you next week, but if we could have continued selling for next week, we're going to be looking for spots to buy this. It's not going to be down there at 4,100, but it's certainly going to be somewhere where we started to take off with some pretty good, I call it healthy buying, um, from mid-March, and that's going to take us all the way down another 100 points on the S&P. It's going to, if this hypothetical happens, it's going to look nasty, and I'm looking for some type of strength between the first and second ATR on the daily time frame, down to about 43.80. We could just call it a 100-point move to the downside. We'll be looking to take advantage of, whether that be through the NASDAQ or the S&P. I'm pretty sure we're going to be paying attention a little bit more to the NASDAQ. But one more thing before I let you go, the 2-hour time frame. Let me show you this. This has a squeeze right now, and definitely paying attention to the 2-hour because it shows you just how clear the double bottom could be. So I know it's a 2-hour chart, so it doesn't give us the full view, but just to bring out the red 10x bars, the two indicators I don't trade without, the 10x bars and the squeeze. I think it's also very helpful that you have a ready aim fire. A lot of sell signals across the board on those mid-range time frames, not lower high, but specifically like the 1-hour and the 2-hour. Those don't look good because of the red 10x bars. So let me show you this hourly chart. One thing that I like to do is sell the hourly 21 or the hourly 35. Some of us traders also like to sell the hourly 50, and that also is 14,500. So if we can try to sell the 450 or 500 in the early part of next week, I think that sets us up for a fantastic short. And things could get ugly there after rebounding. It could be kind of a false rebound. It's a tough call. We're here in April, and I'm typically trying to buy April into May, sell in May and walk away. We're not there yet. So I think we're already kind of getting a little bit of the base that we're forming. It just could get ugly, and that's what I'm looking out for y'all, for myself, and specifically just because we have not been holding any of the buying. And I think Tuesday tells us a lot, especially because nothing recovered, and the Friday close, we ended up below a pretty important level, which was 14,400, and not even close on the S&Ps to 4,500. One more thing, if you've been paying attention to gold futures here, you have a high compression squeeze on this daily chart. This is going to be a lot of my work next week on commodities. I'm going to be looking to finally start a pilot position for the long term on gold, trying to take advantage of time, but also trying to take advantage of the high compression that we have. And that should be interesting. I think it'll be a fun play. Also, if equities get hit, obviously gold and other metals could stand to have a really nice run, especially coming out of that high compression on the daily time. Now here is the cherry on the sundae. The 4-hour chart on gold has a high compression that's firing into a normal compression. So keep that on your radar. A 4-hour is complementing a high compression daily squeeze, and by the way, the 10x bars on gold on the daily time frame are green. So we held a reversion to the mean, and we are holding with flying colors the 1920, kind of 1925-30 area. And I think this is the perfect spot to be looking for a long-term position in gold. And even better, if we come in on Monday and we get a false pump in the market, and we can get gold at lower prices back down to that 1925, maybe back down to 1930, that would be setting you up perfectly for what I think is going to be a really great 2022 long in gold. And we'll talk about expiration in the rooms next week. There's many different ideas that I have. We don't necessarily have to go into the last part of 2022 with this idea. We can certainly kind of entertain this on a 3-month to 4-month basis into the summer. So what I'm thinking is just cautionary tale for being bullish on equities, but cautious to just not rush into gold just yet. Let's see if we can get a little bit more of a pullback and see if we can revisit that 1926. And I think ultimately that's where you want to be long in gold. So certainly fun stuff. It's been exciting. I don't love the back and forth, but I think we could be in for a little bit more direction finally. If you've been short from Tuesday, hats off to you. I mean, you probably were looking at the Head and Shoulders, and just continued selling over the rest of the week has just been probably just a fantastic trade. So good on you if you were short this week. But we'll definitely be tackling a new monster. Seems like we are doing that every week on Monday, and see if we can get a little bit more of a false bump and see if we can sell off just a little bit more through the short week. And then the week after that, we have earnings kicking off. We've got Tesla on the 20th. We have a lot more names that will be big movers. And that's where I'll be looking to, if we can get that hypothetical dip, if we can really kind of sell off next week, I think there'll be some decent spots to come in and buy this thing. So trying to play both directions. It's not going to be easy, but we have some really good tools that can help us make some good decisions. All right, y'all have a great weekend, and we'll tackle this beast on Monday. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.